If you look at the last 23 election years dating back to the 1920s, 83% of those election years ended with a positive return in the S&P 500. That's incredible. Well, if you look at the data, actually, in both cases, the market ends higher on average. In the case Republican wins, it's around 15% average annual return. In the case that the Democrats win, it's around 10. But either way, I was like, that's pretty good. And then on the fundamental side of things, I knew that this Fed pivot euphoria. So I think the point when I realized that this Fed pivot thing was going to just keep driving stocks higher, it was December 2023. And it was the strangest thing. Jerome Powell like completely changed his tone. It was like 2 weeks before he said, we're not even talking about rate cuts and nothing. Like it was a CNBC article. And then literally 2 weeks later, he's like, yeah, we're looking at least 3 rate cuts, maybe more, starting in January. At one point, there was 8 rate cuts priced in. It was like wild. And I said, yeah, when the market is this euphoric about the Fed cutting interest rates, we're not going to get bearish.
Well, because people aren't going to wait for them to cut and then invest.
No, absolutely.
They're going to invest and then wait for the cuts.
That's exactly right. And you're seeing it right now. The same thing is happening right now. So, and then there, at the same time, you had every headline in the world, every headwind in the world, that could have brought stocks lower, from wars to people saying earnings were going to decline to, national U.S. debt, you name it, it was there, but nothing was impacting the market. So we made the thesis that risk appetite right now, I think risk appetite right now is just about as strong as it's ever been in modern U.S. history and for the market. And that's something that's not worth fighting. You have higher highs, higher lows, strong technical uptrend. You have a market that's literally looking for any reason to rally. We're up 40% over the last 12 months. If you look at, and I know I'm just like spewing data here, but that's how I kind of think. If you look at every annual gain from like annualized on a fiscal year basis, the last time we had a 40% year was in the 1950s, 1954, I think it was. We don't have a 40% year necessarily, but we have 40% LTM.